I want to show you one of the most popular investing strategies that our users on FoxRunner use every morning as a guide to help you get started with using our platform. Today, we are going to break down this strategy step by step so you know exactly how to maximize the FoxRunner platform. It doesn't matter if you're a buyer, shorter, or dip buyer, this strategy will help you find and research your plays quickly. First things first, let's talk about you as a trader. We all have heard of the statistic that 80% of investors fail, but why is that? Well, the majority of traders do not have a plan and instead rely on others to tell them what to buy and sell. When it comes to trading in the stock market, those who are too late are those who will see the biggest losses. Let's create a situation you may have occurred in the past. Imagine you wake up and walk over to your computer to find out a stock is spiking 35%. By the time you place an order, it's already up 100%. You see other traders on social media making money and you feel as if you are missing out on the next big thing. So you start to get emotional and end up buying in at the top, thinking there's more room to run. But every time you click the buy button, the stock reverses and starts crashing. It almost seems like someone is watching you. The moment you click buy, the stock reverses. Does this sound like something which has happened to you in the past? Well, the first thing you need to do is to understand that nearly every day the same thing happens. News is released. Buyers move into the stock as they are in early. The stock spikes and builds momentum. And once momentum shifts, the stock starts crashing as it turns into a selling frenzy. Nearly all low float stocks that spike rapidly in the morning will come crashing back down. We saw CANF, the #1 top gainer, spike from $4.80 all the way up to $14, then crash all the way back down to $4.90. We saw VCIG go from $8 up towards $33, then all the way back down towards $5. This is not a rare occurrence. That happens daily. This is where most traders get it wrong. They think stocks always go up. That mindset works for the S&P 500 because those are the strongest businesses in the world. The Mag 7 plays, Tesla, Google, Apple, Microsoft, those you buy and hold as they are fundamentally sound. So let's break this down to show you how to maximize FoxRunner. There are over 10,000 stocks available to trade currently throughout the entire stock market. And only about 1,000 of them are good companies. We have the Mag 7, the S&P 500, which are the 500 best plays, and maybe another 400 to 500 that are profitable and fundamentally sound. That leaves us with nearly 9,000 stocks that are either average, struggling, or slowly failing. Most companies on the stock market are not Mag 7-like companies. They are on the stock market for one reason only: for you to give them money so that they can hopefully be successful. So here is the stat I want you to remember. The BLS statistics show that 8 out of 10 companies go out of business within 2.5 years of starting. The stock market is 10,000 companies, and as we discussed earlier, 1,000 are actually credible. So if your plan is to say, let me just keep holding all of my losing stocks, it has to come back up at some point, the answer is no. No, it may not, and most likely it will not. Now, let me show you the top gainers today and what they have done over time. IBO was $3 a year and a half ago, and now it's down to 39 cents. GXAI was $6, and now it's down towards $2. MOBX was $10 down towards 98 cents. TMDE was $4.50 down towards $1. NAGE was $15 down to $5. The majority of these stocks fade and fall over time. That means you have better opportunities to win on the downside and not the upside. I want you to realize a few things. Number one, stocks with lower floats are going to be stocks that go on the biggest spikes, the biggest rips, and the biggest runs. Nearly every morning, stocks with sub 30 million in float will make up the majority of top gainers on the day. What is float, you might be asking? Well, float is the shares available to the public, the stocks with the lowest supply. What we need is a low supply because that leads to strong volatility. If 100, 1,000, 1 million people buy a stock that only has a limited amount of shares, that's where the stock can go on an explosive move. So let's filter this out. We have 10,000 stocks If we change the float to under 30 million, that shows us just under 2,000 companies. This is 2,000 stocks that allow us to see strong volatility. As someone who trades every day, I don't care about a stock that's going to be slow and sluggish. I want to find a stock that has volatility. That's how we make money. Volume equals activity. Activity equals profits. For a better understanding, anything under 30 million is considered a low float. Anything 10 million and under is a very low float. The lower the float, the bigger the news, the better the chance of a massive breakout. Now, here is the formula. We have a low float play, but what leads to stocks going on a very big spike or spikes? There has to be a reason. We need credibility. This is where FoxRunner comes in, because we need a reason for people to buy these plays. Every single morning, we have all of us, me, you, the world, what we call the mob, aka the majority of buyers. We are asking ourselves, what should we buy? What should we all jump in on? Everyone comes to the same conclusion on whatever has the best news, whatever has the best press release. So every morning you want to find what is going to be the best stock with news. And that brings us to Scanner. Go to foxrunner.com and download FoxRunner. You are going to have every single press release that comes out. News comes out at certain times, at 7 a.m., 7:30, 8 a.m., 8:30 a.m., and 9 a.m. These are what we call the PR waves. On FoxRunner, go to your additional filters and forget about everything except float. Set it to 0 to 30 million. What this does is immediately narrows things down to around 1,800 stocks. Out of those 1,800, only a small portion will actually come out with news on any given day, usually somewhere around 200 to 250. So without doing anything complicated, you've already gone from thousands of stocks down to a small group that actually has a reason to move. You're not trying to watch everything. You're letting the scanner narrow it down for you so your attention is only on the stocks that really matter. Now, once you're at this point, the next layer is the news itself. As you watch the scanner over time, you'll start to notice the same types of words showing up on the biggest movers, the same kinds of headlines, the same language over and over again. Some news barely does anything, while other news immediately pulls attention into the stock. Your job isn't to read everything in detail. Your job is to quickly recognize what kind of news you're looking at, which is why we use keywords, voice alerts, and push notifications. If something is early stage or just getting started, it might bring in some interest. If it's more confirmed, like an approval or a completed deal, that usually brings in more attention. And when it's something stronger, like an agreement or a major partnership, that's when you start to see real movement. Now, when you're looking at the scanner, keep it simple. Your eyes should go to three things right away. When did the news come out? What kind of words are in the headline? And what the float is. And that's what you're checking first. Every time something appears, if those three line up, that's when something becomes worth your attention. Now, let's walk you through how this actually plays out. You'll see a stock appear on FoxRunner scanner during one of those press release times. It's low float and it has a strong keyword, something like agreement, approval, or partnership. At that moment, before even looking at the chart, you already know this is something worth paying attention to. As soon as it shows up on the scanner, you pull up the chart and watch what happens next. Does price start moving quickly? Does volume begin to come in? Does the move look clean or does it look choppy? You're not predicting anything here. You're just watching the reaction to the exact moment of news. When it starts moving fast and participation increases, that's when you know the market is actually reacting to the news you just saw on FoxRunner. Now, this part is important because not every spike is the same. Some moves are clean and strong, and others might move a little, but don't really have anything behind them. Weaker moves tend to be slower and less consistent, and sometimes you'll see something move without any real news at all. When that happens and you don't see a clear press release on FoxRunner to match the move, that's something to be wary and careful of. Now, once a stock does start moving, you'll notice the same pattern repeat over and over again. News comes out, people notice it, price starts pushing up, momentum builds, and then at some point it begins to slow down. You'll start to see the situations where prices push higher, but it doesn't hold those levels. that's where those upper wicks come in. Now it shows that buyers were there, but they weren't able to keep it pushing higher. It doesn't guarantee a reversal, but when you see that happening after a strong move, it's telling you that momentum may be starting to slow down. So when you put all of this together, the process becomes much more clear. You're watching FoxRunner during the key press release times. As news comes in, you're immediately checking the time, the keywords, and the float. When something stands out, you go straight to the chart and watch how price reacts to that exact moment. You're not chasing the move and you're not guessing. You're now understanding what caused the move, how the market is reacting to it, and where you are within that move. Once that starts to click, it becomes something you can repeat. And that's really the goal here. Now you understand the strategy. Now you know what to look for. Let's get ready to trade.